Hello, everyone. I think we are ready to go. Just waiting for a few more people to join, then we'll get cracking. So this is our last market outlook of the week. So we've been doing 3 this week. We used to do these just on a Wednesday, but I thought for a few weeks we'll do them Monday, Wednesday, Friday. See how much interest there is. And I think they've been quite popular. We've picked a good week to do it because, of course, we have incredible volatility across all sorts of markets. It is mainly stocks. We saw stock markets recover last night into the close, but then we had results from Amazon and Google, Alphabet, and we've seen they met their earnings, but missed revenue expectations. And I think because markets are so jittery, we saw quite a sell-off in after hours for those two stocks, and it really has weighed on the overnight futures. I think the S&P, we'll have a look at all of this in a minute, but the S&P slipped to a new low for the down move that we're in. So I think we're set for another volatile session today. So I think that risk warning has been up long enough. Let me just drag the trading platform across. I've made this, what I'm doing with this screen, because I think it's the font maybe doesn't come over too clear on YouTube. So I've zoomed everything in. So hopefully it's a bit clearer today. So this is our platform. If we have a look, where's the Dow? So the Dow, you can see here, the Dow Jones here has been as low as 24.6 overnight and as high as 24.829. I really like this arrow thing that we've got going on. This shows us where is the market compared to its range for the day so far. If we look at something like pound US dollar, here we go. We can see pound US dollar is pretty near the lows for the day. Euro yen is near the lows for the day. But let's take a look at these stock markets. Let's start off with the S&P 500. Let's bring this chart up just to show you again the volatility that we've had out of hours. There's the move. So if we look at yesterday's session for the S&P, let's just get this moving average off for now. Let's just take that off. And we'll add some other stuff in a minute. So it closed yesterday. Where are we? 2100, 9 o'clock yesterday. So closed here yesterday, the S&P, 2706 last night. So it's sort of good, 40-point move off the lows. But here you can see these are 5-minute candles we're looking at. This is when the results came out. So the Amazon and Google, amongst others, came out last night. And I think if we'd had those results 6 months ago, I don't think we would have experienced the sell-off that we did. But I think because markets are so jittery at the moment, that's why we saw them fall. So we saw it fall really sharply from 26,706. It's traded this morning as low as 26.48. So that is a big move. We'll look at the Dow in a minute. So just to take this back to the hourly chart, there we go. That's the extent of the decline we've seen this month. So we've gone from highs of, I think it was just about all-time highs, 29.40, down to 26.60 today. So it's not far off a 300-point move. So almost 10%, let's say 8% or so for the S&P 500. We'll look at the Dow, the Nasdaq, and also the German DAX. Let's flip this over to a daily chart for the S&P. So here we go. This is where we are. So I think the S&P this week has gone negative for the year. So if you bought the S&P at the beginning of the year, you're currently down for the year, and that's after setting fresh all-time highs. So we're back down now at the moment. We've still got just under a couple of hours until the market officially opens. Of course, it opens at 2:30 UK time. We're back to where we were in May for the S&P. And it's still weak. I think when we looked at this on Wednesday, I said stock markets were incredibly hard to call because of the volatility, because we'd see them sell off really heavily one day, only to bounce back really strongly the next day, and then sell off again the next day. And that's exactly what we've had since Wednesday. So we've got, it's weak going into this afternoon. If we're looking a bit deeper down, if we do see the markets continue to plunge from here, the big levels to watch are these lows from earlier in the year when markets fell off a cliff in February. So 2530 through to 2600 on the S&P. It sounds like a long way away, but given some of the volatility we've seen just over the last 3 days, the market's moved 100 points, which is about 800 points in Dow terms. We'll take a look at the Dow in a minute. So these markets are really weak. Let's see what happens going into this afternoon. But the overnight lows are one level to watch. So 26.50, 26.45 through to 26.50. Let's see if this move in the 24-hour market is something of a knee-jerk reaction to those numbers from Amazon and Google and others, and has been mainly overdone. Maybe we'll see something of a bounce back again today, like we have seen all this week. But it's still weak. We have seen some incredible volatility over the last few days. Let's take a look at the Dow. Let's take a look at the Dow Jones. Let's bring that one up again, just to get a feeling for the sort of moves we've had since last night's close. So if we go back to last night, the Dow finished off, where are we? Around about here. So about 25,000, and it's been as low as almost 24.6 overnight. So a 400-point drop overnight, dragged down. It has rallied off these lows. So it's left this 24.6 low overnight. That was set just at 10:30 this morning, so a couple of hours ago. In the overnight market, the market has rallied 100 points off there. So I think when US markets open, let's see how that performs. At 1:30, we do have US GDP coming out for the last quarter. So how well or how badly has the US economy done in the previous 3 months? So that's going to be, I think, a really interesting one to watch in just under an hour's time. You'd think if there was a slight miss there, given the nerves in markets, we could see a bit of a knee-jerk sell-off. But going into this afternoon, 24.6, I think, is the level to watch on the Dow, the really short-term level, the lows that we've seen, and then after that, the lows maybe from Wednesday at 24.550. We picked up on this trend earlier in the week. Actually, let's add some indicators in here, because I'm guessing these markets are going to be pretty oversold, considering the weakness we've seen this week. Let's just make this a 10-day, a 2-week RSI. Here we go. So here's our, this is the most oversold markets have been this year. Of course, that doesn't mean much. If a market is really tanking, then it will go oversold. The market doesn't care that its 10-day RSI is oversold. A market could still continue to fall. But for the Dow, early in the week, we picked up on this trend from these lows coming in about 24,200. So 500 points below where we are now. Let's see. But maybe there's a feeling that the overnight sell-off's been overdone. Maybe we get a small bounce back today. But it doesn't really change that bigger picture of the slides that we've been in since the beginning of October. So these are markets that are still very nervous. Let's take a look at the NASDAQ, because clearly the tech stocks is maybe what sparked this overnight. I was just reading, I think, on the FT website just before I came in, or I think I saw it as a tweet, saying that the NASDAQ looks set to have its worst monthly performance since October 2008. So again, the irony, after setting fresh all-time highs at the beginning of the month, it's going to be the worst one in 10 years, going back to the financial crisis, depending on what happens today. So again, let's just pick up on the trend here and see what this looks like. So we've got our trend line from down here. So we're bang on that trend, really, for the NASDAQ on this year's trend off those February sell-off lows, give or take. It's about 6,700, 6,800. The market is trading at 67.70. So we're on the NASDAQ. We're back to where we were again in early May of this year. So let's see. Let's see what happens. Someone's asking a very specific question about sector rotation in the US. Let me have a look at that over the weekend, and we'll pick it up on Monday. We'll pick it up on Monday's session, because I haven't got that stuff off the top of my head at the moment, and we only want to do sort of 15-20 minutes today, but I'll have a look over the weekend. So here we go. So we got the NASDAQ pushing below that downtrend line. Again, a big sell-off overnight. Let's see the size of the sell-off. So the NASDAQ closed, where was it? Around about 7,000-ish, the NASDAQ 100 last night, and it's traded as low as 67.25. So I think for the Dow and the NASDAQ, if we believe this reaction in the out-of-hours markets is overdone, the obvious levels to watch today are the lows set in the out-of-hours markets. So these lows set a couple of hours ago, about 10:30 this morning. But we do have that US GDP data coming in at 1:30, so we could well see a bit more volatility ahead of the open today. But if we flip this over to an hourly chart, it is clear that our trend is still down. If we pick up just on the trend over the past 10 days or so, let's pick up on that and just plonk our trend line on that. we're still, well within that downtrend. The market could rally from here, but let's not forget this downtrend coming in. It's about 300 points higher than where we are now. So we could have a rally from here and still be within that downtrend. So I think we're in for a really interesting end to the week. We're going to do this all again on Monday, of course. So we'll see exactly how Friday ended up when we look at this on Monday. And just one quick look at the DAX, the German market, 11,000 for now at least appears to be something of psychological support, shall we say, for the DAX. It has had massive decline. If we go back to here, these highs end of September at 12,500 ish, trading down almost to 11,000. A 22-month low is where we are on the DAX. So we're back to December 2016 levels. So it's a market that has been really weak. Interestingly, though, even though in the out of hours we're seeing the S&P, the Dow, and the Nasdaq moving to new lows for this down move, we haven't quite got it for the DAX. So if we let's pick up on the lows. I'm a big fan of looking at previous levels in the market, previous major turning points. So we had whatever that low was late last night, about 11,040. Today, between 10 and 11, it traded down to pretty much the same area, and so far it's held. So again, it gives us, I think, an interesting level. Here we go. It's this level. You can see it from back here from Wednesday, and it has held again today. So going into this afternoon, the lows from this morning are the big ones to watch for the DAX, around about 11,050. But even if we do get a bit of a bounce back today, thinking that the knee-jerk move overnight has been overdone, it's going to take a lot at the moment to change this DAX trend that we're in. We are still very much in the slide from up here. Looking something like that. It needs to break through the 11.4 highs to shake off this current stretch of weakness. And famous last words, but I don't think we're going to see that today. I don't think we're going to see, well, maybe we will, a 300-point rally in the DAX this afternoon. Let's see what it brings. So stock market's really under pressure, very volatile week, really hard to call, I think, day to day, because it just flips around with enormous volatility. But let's see if the overnight sell-off has been overdone. Another market that is still sliding, pound US dollar. I finally went short this week after sitting there. I've got on the break yesterday below the lows from the day before. After sitting there and waiting to see if 129 to 130 held, it really has just it's gone down almost every day this week. It's gone down the last 3 days. Anyway, let's just take this off. It looks like it's broken that recovery. This is pound US dollar. That recovery we had off those August lows down here. So we've fallen out of that recovery. The next big level, we're pretty much on it now. It's this big day we had on September the 5th, where the market sold off to 127.80. It's currently trading to 127.83. So it's just it looks like a little look below that level. But it's still weak. It looks like another negative end to the week for pound US dollar. As we've seen in recent weeks, there's been a lot of news that's broken over the weekend to do with UK politics and Brexit. So maybe we'll have something out this weekend as well. And the next big level to watch, the really big level, these lows that we had in August, I say 126.50. So it's only 130 points away from where we are now. If that level gets broken, we're probably looking at these old lows from June. So the pound under pressure has fallen out of this recovery, and as we're looking at it now, it's making new lows for the week. So pretty weak market, that one. Also, euro dollar. We are seeing a resurgence for the US dollar. Let's take a look at euro dollar. So this list I'm looking at here, this is the most traded amongst our clients. We'll take a look at gold in a minute. So gold, euro, DAX are the 3 top markets that our clients trade. But let's take a look at euro dollar, because there's a really big level coming up for this one, and it's 113. It's those summer lows. So we are seeing a definite resurgence for the US dollar this week. But the summer lows, the market got as low as 113, near enough. Yeah, at the moment, the euro dollar is trading at 113.36, so we're not far at all. And that's going to be the test. Does the 113 low hold? And if that breaks, it does feel as if there's a fair bit of fresh air beneath it. Considering the move, it is oversold. But as I've said, in a strong trending market, indicators such as RSIs, relative strength indexes, can move to an extreme pretty quickly. So again, it's the euro getting a bit of a battering as with the pound, over the last few days. So really under a bit of pressure. Let's look at the two commodity markets. I think these are both interesting for different reasons. Let's take a look at US oil first of all. So US oil, just to remind ourselves, if we go back to the daily chart, we've been talking about this trend for quite some time now. If we pick up on the lows from, oh, hang on, did I switch it off? The lows from last summer, something like that. Let's say, I haven't drawn that very well. Let's put that down there. And we saw the price of oil hit pretty much 4-year highs at the end of September, beginning of this month. And it sold off, it traded as high as 77. It's been as low as 65. It has fallen out of the trends, but I think for me, it's more about this big support left back here, around about $63 a barrel. So at the moment, for my money, I'd argue it looks like just a correction within that big uptrend that's been in place since June of last year. So we get sell-offs, quite steep sell-offs, and the market snaps back. So the test is going to be, I think, the levels to watch going into next week. These old lows around about 63, near enough. It's oversold on the RSI. The last time we went oversold in the uptrend was back here, which did call the turning point for that sell-off. Then back here, that didn't do too bad a job. Then let me zoom it out so we can see it. Back here, which is maybe a bit premature. So I think maybe the one to watch for next week is do we see strength coming back in for oil and for it to start a run back up to the mid 70s again. That's all assuming 63 holds. So I think oil's been an interesting one. It's been a quiet couple of days. It has held above the low it set on Tuesday of this week so far. So that 65.80 low. Let's flick this over to an hourly and we'll see that. There we go. So you can see fairly uneventful few days. That was the low on Tuesday, big sell off on Tuesday, but then Wednesday, Thursday, and so far today, it has been holding above 65.60 to 66. So maybe there's an argument for oil starting to build a base up here. And to wrap things up, gold, you'd expect if we're going to see more volatility in stock markets, you'd expect gold, there's my arrow that I delete all the time when it comes back. You'd expect gold to find more favor, but clearly I think that's been balanced off by strength in the US dollar. We're seeing the US dollar rise the last few days. Gold will traditionally move the opposite direction to the US dollar because it's almost like a currency. Gold / US dollar. If the dollar's going up, gold will go down. But we still have the breakout of this downtrend that we were looking at over the last couple of weeks. The market had gapped higher and it still looks strong. The price of gold still looks strong. Any weakness, we're arguably building something of a new trend in gold now. Any weakness looks to be a buying opportunity. I think, as I was saying earlier this week, it's not actually moved that far from where we were on Wednesday when we were looking at this. We're still trading around about $1,235 an ounce. But where it will be interesting is if we see it sell off. We're looking not quite overbought on the RSI, but it's getting there. It's getting close. And where it starts to get interesting, I think, is if the price of gold sells off from here back to maybe the low 1200s. Do we see the buyers come back in? So gold still strong after that downtrend break. Oil has calmed down and held this week, and I think the markets to watch are still stock markets and the likes of the pound and the euro. But I think immediately this afternoon it is going to be stock markets. In 40 minutes time, we've got those latest US GDP numbers. We could see some volatility ahead of that. But like I say, the levels to watch, if we're going to expect to see perhaps some sort of recovery this afternoon, is how these markets perform. This is the Dow. If they start to slide back to these out of hours lows. So on the Dow, 24,600 is the level. It's already dropped 20-30 points since we last looked at it. Let's see how it performs over these GDP numbers, and then the official open at 2:30. Let's see what sort of day we end up with. But really fascinating week. I think loads of volatility still in stock markets. We'll do this all again on Monday. We'll see where we are Monday lunchtime, what's happened over the weekend. If you have any questions in the meantime, feel free to drop me an email. My email address is david.jones@capital.com. And to find out more about the company, open an account, see what markets we cover, open a demo account, and so you have access to the platform I was using today. Just go to the website, which is Capital.com. Obviously, right. We will wrap things up there. I think we're in for an interesting end to the week. Thanks for coming along, and we'll do it all again Monday lunchtime from 12:30.